Here we have Speedway MotorSports, and actually this is not a very good chart because we see a bad piece of data here. What it's doing is it's skewing everything and compressing it. So we're going to have to rely on the 1 month and the 1 year chart here. 1 month chart is very steadily moving lower, and a big breakdown here. This is a very bearish chart. And here we can see that the stock's in a fairly tight trading range, still in a tight trading range last fall. Once it breaks down, it's actually been in a very steady sell-off. So this could be a promising candidate. This is the type of stock where I would expect to do some type of call credit spread. It looks like it's going to continue to drift lower without any huge declines, but a gradual move lower. Here we have Ambassadors International, fairly weak drift lower, a little bit of a bounce with a nice spike up near the close, probably some short covering rally I would suspect, but we can see that on today's open that spike was given back instantly. And then throughout the course of the day, the stock drifted lower and actually took out that support at $9. I'll take a quick look at the 1 month chart. This is very negative. 1 year chart, again very negative. We see support here. Stock is broken down through it. I have to be honest with you, I don't like shorting stocks that are under $10. There's just not enough meat there for me to make a big profit on. So this is probably a good short, but I'm going to take a pass. I have the airline theme. This is United Airlines. You can see how steady the decline has been during yesterday's monster market rally. The stock did not participate. Today it gapped down and closed near its low of the day. This is an outstanding 1 month chart from a bearish standpoint. Look at how tight that is. The stock just cannot get a bid, and every time it tries to rally even a little bit, it's met with immediate selling. And this is a very choppy chart, although here you can see that 1 month chart that we were looking at, and you can see how steady that decline has been. And right here we have a support level that the stock is breaching. We know that fuel costs are high. This is probably a solid short. I just don't like the choppiness in here quite that much, so I think we'll probably tend towards one of the other trades, although this will probably make a decent short. Here we have Collective Brands. We can see the stock drifting lower. Yesterday it gaps up with the market, but starts to falter pretty early, and then we do see a little bit of a rally back with a surge that the market had near the close. As soon as the market opened today, the stock gapped down below support, and it finished right on its low. So the stock finished below $13. Here we can see on a 1 month basis it really had been in a fairly tight trading range, and then now it's starting to cave in a little bit. Today's selling was very accelerated. On a 1 year chart, I had mentioned stocks that are in a very tight long-term trading range tend to have big breakouts or breakdowns. Here we can see the stock had support at $15 and resistance at about $17. This breakdown is probably very tradable. I do like it. Even though the stock is at $13 right now, it still could easily have $2 or $3 of downside left in it. So this is a consideration. Here we have Park, Ohio. Stock is drifting down. No rally yesterday to speak of, and a huge gap down today. The stock fell from $19 down to $14. So it lost about 25% of its market value on the open. We can see here that that was an overreaction, and the stock did rally up a little bit by the close, and it looks like it closed at just shy of $17. On a 1 month basis, stock has been in a very steady downtrend, and on a 1 year basis we can see that it rallied up, and it's had a lot of choppy price action in here. Perhaps even some short covering in here, but it has taken out a significant support level. A little bit too choppy for me though. This will be my final chart, and it is Cardinal Health. We can see a steady deterioration in the price. On yesterday's gap up in the market, we can see the stock surge. Some of this might have been short covering right out of the gate. We can see that the stock pulled back once it hit that peak, and it did rally through the course of the day. Today it opened higher with the market, tested that resistance level, and then absolutely fell apart. So even after yesterday's huge rally in the market, this stock has actually finished today lower than it was 3 days ago. So that's a very bearish sign right out of the gate. Here we can see the stock broke significant support there, had a brief bounce, and then now it's actually taken out that level. This could be a nice bearish trade. We can see that it is in a general downtrend, and the one thing that I pick up on here is that even when the market was rallying last year, the stock was already starting to drift down. Very choppy price action though, and very difficult to time. This is the type of stock that you would probably want to do some type of call credit spread on. Take advantage of out of the money time premium decay. It will not make my chart of the week, but you can see here that there is triple support at that $56 level, and we broke down through that $56 level today. So probably a decent short, but you can expect a few little snapback rallies, and I would still suggest selling an out of the money call spread on it. So now I'm going to go through all of the picks, and I'm going to select one as my chart of the week. This was actually a very tough pick for me. I decided to go with Precision Cast Parts for a short-term trade. I just love this price action here where the stock is drifting lower and drifting lower. We get the big market bounce. The stock can't get anything going. In fact, it pulls down while the market's rallying like mad. Gets a little bit of a rally towards the end of the day. And then today when the market opens flat, it's already starting to crater, and it takes out yesterday's low. On a 1 month basis, the stock has accelerated selling pressure here. And on a 1 year basis, we can see that this horizontal support level, this 52-week support level, is being taken out. Stock had a nice move, kind of flattened out, and when it started to cave in, it fell very, very quickly, had a shallow little bounce, quickly came back to test that support, and now that's giving in. So on a very short-term basis, perhaps the next 2 or 3 weeks, perhaps even the next few days, I feel that this stock is going to head lower with the market. On a longer term basis, I actually like one of the other picks a little bit better. If you're viewing this video, say 2 or 3 weeks after it was produced, this might still actually be a good play where the other one might have actually run its course. Collective Brands is just drifting lower. Tries to rally a little bit with the market but doesn't get much of anything going, and then today it breaks down, sells off, and closes near its low of the day. On a 1 month basis, I can see that the stock was in a fairly tight range, and then once it broke down, the selling really started to pick up. On a 1 year basis, I had mentioned you have an extremely tight trading range. You have hard support here at $15 that was broken. I believe this stock can go down at least another $2 or $3 from its $13 level, and that would present a nice return on your investment. Remember, these stocks are diamonds in the rough. This is only part of my routine, and next what I would be doing is I'd lift up the hood and I'd find out what's going on within the company. I'd be taking a look at the different news releases, finding out why the company's selling off. I'd take a look at the last earnings report. I want to read the guidance that's come out from it. So there's a lot of research that still needs to be conducted, but technically these stocks look like very good shorts. Good luck with the trade, and I'll look forward to releasing my next chart of the week a week from today. Thank you.